Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, October the 21st, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the market. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. 1 is done. We're working on 2 before we go breaking out. Question is this the bottom? Possibly, but still more unlikely at this point. And we still believe we're going to keep stair-stepping lower. But remember that at one point, sometime sooner than later, but no later than later, this wave 2 will end somewhere between this area and our long-term target down here near 80. Some point when the wave 2 is done, it is going to go breaking out to new highs. That is the plan. Question is this the bottom reversal now? And it's like I was stating, I don't think so, but let's jump into the charting platform and we'll look at what happened. This did retrace, test the Magic Fibo, bounced off of it like we expected. We came down into an area of interest, which was this swing point low to the high. We tested that 618,786 zone and we bounced out of it. And now we're testing to the upside from the recent high to low, that 618,786 resistance zone. So basically, high level overview, Emil, James, Ian, Mr. Tucson, if we get a lower high on this move, then we start breaking back down, then the probability we're going to make a new swing point low is very high probability. So we're below the Magic Fibo. That is still more bearish than bullish. Our retracement to the Magic Fibo, kind of what we had planned when this reversed here and didn't break that 618,786 zone. We said then that we were likely going to get it to what? Rally into the Magic Fibo. We did that. Then I said once we got up there, be careful because I do expect this to come back down. Well, all that played out beautifully to the point where we got a 618 retracement out of this. And the bigger green box down here is from the recent low up to the high. This is this bigger box here. So not only do we need this to make a lower high here and a lower low, but we really need to start breaking below that 97.50 area. That's the big level. So if we get a lower high, lower low, the probability we keep stair-stepping in that direction becomes high. And then once you finally see us drop a point plus, we get to that 97.50 and lower, then the probability we go and make a new swing point low, which would be targeting 95 area, becomes very high. Fair enough? So the reason I say we're more likely have not completed this swing point low and that it's the end and we're ready to go breaking out to new highs is because of this price action, A, and B, we're still below the Magic Fibo. So any questions where we think the dollar's going? We want to see a lower high. That would be good. Then we get a reversal back down, make a new swing point low, and ultimately close below 97.50. and then we're cooking with some grease to the downside. What would it look like, William Bruce? What if we don't get a lower high and we go breaking above? Now, we could have some major issues with this being the, temporary swing point low if we see something like this, where we go up, we break the Magic Fibo, we come down and retest it, then go on to blow above 102. Remember, that's the big short. There's a lot riding on that 102 level. And if price starts getting above 102, that's going to force a lot of those shorts to be triggered, and you would get that short squeeze. So what we don't want to see, if you believe we're going to continue to grind lower, we don't want to see this break above the Magic Fibo, come back and retest it, then go bouncing and hitting above 102. That could be a problem and would make this potentially more likely that this is a swing point low we're going to see for some time. Amen? And if we do go blasting up past 102, we hit that short squeeze, and this thing just goes ripping higher, then that's a telltale sign this is probably that wave 2 bottom, and we're ready to go breaking out, even to new highs. Got it? So we'll force price to prove its intentions. But the reason I don't think this is the swing point low of that wave 2, because I think we are going to make some new lows, and up and until price proves otherwise, we definitely have more check boxes on making a new swing point low than we do for this to be the end and we're ready to go breaking out. Fair enough? All righty, let's continue. Got a lot to cover. Why is that important? Because when you know where the dollar index is headed, you have a keen insight to where a lot of asset classes are going, not only multiple asset classes, but last but not least, I should say, is the Forex market. And the euro dollar is the inverse of the dollar index. So when the dollar index goes up, euro dollar goes down, dollar's in the secondary position of that euro dollar, and then the pound dollar would do the same. We got the bounce we were looking for. I told you to get into a position of authority. Now we're coming back with that pullback, just like the dollar, it went down, bounced, and it's testing. This went up and it pulled back, inverse relationship. So does this hold and we go breaking out? Well, I would watch this area from the swing point low, Emil, up to the swing point high. We're kind of testing that 618,786 zone. So I'd like to see this hold, just like I'd like to see the dollar make a lower high and ultimately go toward 97 and below. I'd like to see this euro dollar start to make a higher low, which is the 618,786 zone. And I know I got boxes upon boxes, but it is an interesting scenario that from that low to that high, you can see the 618,786 zone we're looking at right there. We're dipping into it. That's fine. This could be the beginning of a 1, 2, 3, 4, 5, etc., and we go blasting off. So what we must see is not break this swing point low. We start doing that, then that appears that's when the dollar could be going breaking off and this euro continue to come much lower. Fair enough? So in the interim, when we bought the daily reversal on the software over here, we talked about that on the euro dollar. We were going to buy that daily reversal, and sure enough, it rallied a couple of hundred pips roughly, and then we're in a position of authority. Now the daily's trying to engage over. So what's going to happen here? Telltale sign that we're going to make a higher low, higher high would be for our little slingshot, red to hook up, blue to hook up, green to hook up. That would be a telltale sign that this is ready to cycle and we get a failed slingshot down. And again, when we see that disengage, red hooks, blue hooks, green hooks, then the likelihood we go back to this high and make a new high becomes very high. Got it? All righty. So the software was in agreement with buying the dip. We triggered higher, got into almost a couple of hundred pips. I'll come back over here and look at that low to high. We had a low over here, even either one of these close enough. That low was down at 115.40, and we went up to a high of 117.30. So almost 200 pips, just shy of it. So that's why I said back then, be in a position of authority. If you come back and get pipped out, then hey, no harm, no foul. You never go broke taking profits. And this is still likely to bounce and go higher. I'm leaning more bounce and go higher than I am continuation lower. Fair enough? So going back to the dollar index, what's that going to look like? This rally is going to fizzle at a lower high in this box area and start drifting to a lower low. And as we continue with this stair-stepping lower, once we take out 97.50, consider it's over, and the dollar is going to continue to break down and make a new swing point low. What are those targets? From the prior two moves, the last one over here, when we reached the low down here before we got that new low, we did a beautiful three-wave move. We discussed that in great detail, that the measurement from A equals B, your A equals C, would be either equal or up to a 1272. We were just shy of that. So we went right in the zone we were supposed to get rejected from. But this reversal did come back down below the 618 over here. And that meant we were going to go to these targets, and we didn't quite reach it. We came close, but we didn't quite reach it. So these are still outstanding. Even though we've rallied to a new lower high, you can see we did the same thing again. From the low to the high, we took out the 618, 75% chance we'd go to this 95.80, 70 plus we'd go to this 95.40 area. Well, when we got the new swing point low, that low came in at 96.20, which is not too far from that, right? Only about a half a point, a little less than a half a point difference, but it didn't reach it. So this rally to a lower high does not void this. These are still outstanding. Then you take the new swing point low, and we talked about this retracement, and it went to the same type of measurements as the A equals C over here. That did similar type of move. So we're expecting, the only difference is this push lower, we did close below the 618 level. On this one so far, we have not, right? We got a wick in here, but we didn't close below. Even on this low to high, we're into the 618.786. We bounced out of there, well, we hadn't closed below it. So what happens when we start closing below this 98 area? Like we wicked below it, but we didn't close below it. You can see that candle. So what happens when we start closing below that? Then you start targeting this little spot right here around that 97 area. Right there, 97.20, 96.98 is the specific number. But that's what this is. Emil, we get this rejection. We close below this 98 area. Then it says we have a 75% chance we're going to go to 97.20, 70 plus we're going to go to that 96.98, which why is that important? Because we get down there, now we're below the 97.50 we've been talking about. And then that says we got a 75% chance we're going down to 95.70, overlapping. And it says we have a 70% chance we're going to go to 95.20, 95.39, 95.28, all in the same area, confluence of events. So up until price proves otherwise, I am still leaning toward high, low, lower, high, lower, low, and stair step our way down to make a new swing point low off of that guy right there, right? So let me do that, but let me come over here. So we're looking for a new swing point low below that low. Yes, below the prior low and below this low. All we need is price to make that lower high, make the lower low. Once we do close below 97.50, then it's right back to 97%. Well, in this case, 75%. We're going here toward that 95, 70 plus toward the lower 95, and it fits in beautifully with the prior one. All right. Now, the only way I start getting is if we go on and break the Magic Fibo, come back and retest it, then go up above 102. When it hits that short squeeze, this thing could really go surging higher. And that would then set the tone that this little guy down here is very much likely the swing point low. That's only if we get all that. But my bias, we always give you a plan of action and then an alternate plan of action. Well, the plan of action is to make lower high, lower low. Ultimately, we see this close below 97.50 area, then it sets the tone for a new swing point low. Fair enough? All righty. So what's the plan for the euro inverse relationship? I do think this pullback will find support and go bouncing up. Well, I want to see this prior low here hold. I'd really like to see this low hold and just continue this stair step higher. But if the dollar breaks down, no question, this euro dollar is going to go up. That is the plan. So that's why we talked about being in a position of authority. Pound dollar, somewhat similar. We got a nice bounce, the daily reversed, and we got a nice move up in the couple of hundred pip range as well. From that swing point low, we're down about 132.48, and we went up to a high of 134.70. So that was a little over 200 pips. So we said the same thing on the pound. Once the daily PAI reverse, buy that trigger and go higher. The software showed that beautifully as well. Coming over here, that's the 4 hour, but we'll come back to the daily. In the daily reversed, we got the trigger higher, and I told you be in a position of authority that if we do get pipped out, then great. You never go broke going taking profits. So what would this look like? Just like the euro? If the red hooks up, blue hooks up, green hooks up, and that engaged slingshot disengaged, then we're going to go back to the high and make new highs. And that could set the tone for this stair stepping higher, ultimately go and break out the prior highs over here, targeting more to the upside. So the question is, well, Gary, if that's the case, where the euro and the euro dollar, pound dollar start bouncing and our dollar index starts breaking down, what are our targets? Well, initially, from the high to the low, we need to see it get above this 135.50 area. We close above 135.50, you can start targeting 137.90, 138.50. That's this prior scenario over here when we had the high to the low. We didn't quite reach the targets. Well, the dollar index didn't reach its downside targets, so the euro and the pound didn't necessarily reach its upside targets. So we still have these outstanding. And shorter term, once we start breaking above 135.50 and we get a candle body, a daily candle body, not a wick, but a candle body closing above that 135.50, then you got a good 200 plus 250 point run, maybe 300 point run coming. So if you're more conservative and you didn't take that bounce, then you could set a little pending order up here at 35.50, and as long as we close above that daily with a daily candle body, then I'd say, well, let's go long and shoot for 37.90, 38.50. Fair enough? All righty. I'm currently long and I'm in a position of authority. So the worst case scenario, this goes lower and stops me out for more profit, as we like to term that, pips me out for more profit. Any meal? Otherwise, we go breaking above that high, which was the original move up. We go breaking above that high, that puts us right at that 618.35 range, a few pips higher than that. We get above that 135 area, then it kind of sets the tone. We're going to make a big move higher. Amen? So we'd like to see this low, that high, the higher low, basically Magic Fibo hold, and just a little retest before we go bouncing like here. We came down, tested, went up. Well, we kind of tested it, pulled back a little bit more. Now we're retesting as support, breakout. So either way, I'm staying in it to win it. The worst thing that can happen, I can get pipped out for more profit, or we can see this go breaking above 135 area, close on a daily candle, then we're good to shoot for this 37.90, 38.50, tying into 38.80, 39.60. Got it? All righty. Dollar index, just like the dollar index was moving, the dollar yen moves in inverse relation, similar. So in this, not inverse, but similar. So when the dollar was coming down, the dollar yen came down. The dollar is bouncing and it's testing that 618 zone, just like we did on the dollar index. Notice it does mimic the moves of the dollar index. That's why we spend so much time checking it out, because we kind of know where certain asset classes, least of it is Forex, because it does work in a lot of asset classes. So notice from the high to low, we're testing the 618. What did the dollar index do? That exact thing. It's bouncing, testing the 618. So if this goes breaking out, then that dollar yen is going to go breaking out. Pretty simple, right? That's why I always know, once I can track where the dollar index is going, I can track where other asset classes are going. I think you get the point. So what am I looking for? Like the dollar, I'm looking for a lower high, lower low. So I would be careful if I'm long the dollar yen here. Maybe I took that, then I got a little dip, and I'm buying the dip. Well, be careful, because this should make a lower high, lower low, not go breaking out to new highs. But it is what it is. With Tucson, we start closing above 152.50, then I could target about 100 points or so, 153.80, 154.30. But we got to close above this resistance zone, which we're testing. Got it? So if I get a candle body close above, say, 152.50, that little swing point, then I'm good to go shoot for 100 points up. Otherwise, we get a lower high, start seeing the dollar break down, then we go breaking below this low, then we could start targeting Magic Fibo first, and then we could certainly run this the opposite way off of this recent swing point. We start closing below that 618 area. What happens if we do that? Well, if we make the lower high and we break this low, then we can go short and shoot for this 145.60, 144.70 area. So use these tools, and I always bracket it. I have my bracket right now. We're stuck between the recent low to high. We're stuck holding that 618 retracement zone as support. And from the recent high to low, we're holding the 618 resistance level. So we're stuck between support and resistance. So the long of it, we go breaking out, then we could shoot for upside targets. If we don't, and we go breaking the low, then we could shoot for downside targets. And these high probability outcomes are based on our Fibonacci retracements levels and how the software sets up. Does it hold true to what we're looking at when we see price action break support? Then we go short, or it breaks resistance to the upside, then we can go long. Pound yen, same type of thing. I'm still short this. I'm looking for this to go much lower. We're grinding in here. So as long as we hold below this little red pink box up here, that's good. We start breaking the swing point low, the door's ajar to the Magic Fibo, and you can see where those extensions are. So from the recent high to low, we tested the 618 to the downside. And from the high to, let me fix that now. Here's the new low. And from the recent high to low, we got our 618, 786 zone to the upside. So yet again, they all kind of go and coincide with one another. So Emil, we break support down here, we go short. We break resistance up here, we go long. Pretty much that simple. And if you're not in it, then you can just wait, right? Because we're stuck between those levels at the moment. Stuck between support and resistance. Which way do we go? I'm leaning more to the downside because of the much bigger picture on the pound yen, which is we had that massive run up. Remember back in COVID times, I told you the pound yen was going to make about a 9 to 10,000 point run to buy the dips until we get up to that. We had that carry trade unwind that looked very impulsive. And since that impulsive move lower, we've been chopping and overlapping. Three-wave correction, pullback, then a look like three-wave down, three-wave up. It's been clearly corrective. And even after this little run, we're still at a lower high. And all roads on the technical picture looks for more downside, right? You get this impulsive move down. If that's the A, all this overlapping is just a yucky B, then we should get a C coming back down. I do believe that's going to happen sooner than later, but no later than later. The question is, do we go breaking out first, or do we fizzle and start going down? Well, I'm in a short position just to hold that. And again, if we go rallying up and I get pipped out for more profit, then I'll look to rinse and repeat. But the technical picture says, just like the technical picture a few years back, said we were going to go blasting off 8 to 10,000 pips. That played out. Now we're looking for the leg down to match. Amen? So be careful. If you're long, like I told Randy and others, when that broke out above that 202 area, go long, but be in a position of authority, because just because we think we might be going up here doesn't mean we have to, because we got this problem over here. With this move and all this overlapping, I was leaning more toward the downside, even with the breakout. So that's why I kept saying, be in a position of authority. So now that we topped in reverse, we got a monthly overbought, weekly, daily, all that's getting exhausted to the upside. That's why I'm on the short side looking for this to go much lower. In the short term, you get pipped out, you wait for the next opportunity, get a short position, and get to your position of authority, and potentially this thing could run for thousands of pips down. If this is the technical picture, overlapping, we need the next leg down. At some point, we should get it, and we're still at a lower high. That is screaming more downside. But it does not mean, zooming in, that you can't possibly buy some of these. Yeah, that was a beautiful 4-hour reversal. We can come over here, go to the software. I view this, and I always have my software involved to make sure that it coincides with my technical picture, but that's my job. And as you can see here, it was the 4-hour that did a reversal for that little pop. But notice, even since this little pop of the 4-hour, this is so far 3 waves. And this coming down was more of a 5-wave type of move. Little overlapping, so I wasn't thrilled to see that. I like that. Low retracement. I like the lower low. Then we got another retracement to a lower high. I like that. Got another lower low. I just didn't really like too much the overlapping of it, but sometimes that's just the way it works out. And that's a 5 down, 3 up. So potentially we're looking for another push lower, AKA a 4-hour cycle down. So software wise, what can we do? We can set the software to buy the trigger short and set up the next down move. My daily is overbought territory. It's kind of just chopping and grinding, gauge, disengage. So if we can get this to turn and hook down, this turn and hook down, then we're likely going to go back to low and make a new low. But as we go looking at the daily where it is, and then the weekly is up here in overbought territory, and the monthly is in overbought territory. So this is what I've been looking for on the monthly view. I showed you this before, that we have a monthly slingshot engaging up, but should the red hook down, blue hook down, green hook down, and we get this engage, disengage, right? And we see the monthly, this is a big time frame, but this is what I'm anticipating. This red's going to hook down, blue's going to hook down, green's going to hook down, and we would call that an engage, disengage slingshot. And when that happens, the probability we go back to the low and make a new low becomes very good, and the monthly will cycle down over the next multiple months, and we see this thing go much lower, right? That's kind of the plan. That's why I'm trying to establish a short position of authority. So if I get pipped out, then when I get another opportunity, I'm going to get it right back in a short, get to position of authority. But the bigger picture is this is more likely going to end up disengaging, and this will flip back over, and this will start to push lower, this will start to push lower, and ultimately we're going to go back to that low and make a new low. We'll put that into perspective with this charting platform. Where is that low off of that monthly? Well, that's this swing point down here, right? It's where the monthly turned over, started to slingshot higher, and that's the big one, right? This big move down. So at least this 184 area, notice when you come over here to the software on that monthly chart, that's where that comes in, right around that 184 area, right? Here was that other swing point low here where we started to turn. So that's the bigger low. This is the other low. But we come anywhere in this area down here, you're talking that's over 1,000, almost 2,000 pips coming down. I like it, no matter how you slice it. So should this play out with this push lower, overlapping, big push down, you're talking in excess of about 2,000 pips, somewhere in that zone. 202, 92, 82, something like that. I like it. So no buy, sell to hold recommendations. I can't tell you what to do, but that's kind of the bigger picture based on price action and based on the software. And simply stated, we get this monthly to disengage, which it's trying to, red starting to hook, blue is still up, green is still up. So we need the red to hook, the blue to hook, and green to hook, and ultimately end up with that slingshot disengaging, and that gives us the push down toward the previous swing point low, pushing us down maybe a couple of thousand points. All right. All righty then. If you buy these little bounces, like we said, the 4-hour gave you a perfect opportunity for trigger higher to get in and make a few pips. But the bias is we're not likely going breaking out. We're more likely going to make a lower high, lower low, as my 4-hour ultimately turns back over, which in turn, when the 4-hour cycles down, would force the daily right here to do what? Disengage push lower. And as my daily cycles down, cascading effect, well, then we could have a bunch of these slingshot disengaging. We got a daily could disengage, but ultimately the daily cycles down. That's going to force this weekly to disengage. And that'll start pushing this lower. And as my daily cycles and my weekly starts pushing lower, that's going to force this monthly to disengage. Got it? That's the plan. Amen? All righty. So anything long should be very aggressively take profits and look for your opportunity to be in a short. And that's currently where we are. The daily over here, push lower. That was my entry to get to a position of authority. And if this thing goes higher and pips me out, then I'll look for another opportunity. Let's just say, what if this thing goes up here and we do go pushing higher and it pips a short position out? Then I go back short as soon as the daily hooks back down like it did there. Got it? All right, I got a lot to cover, so I know I spent a lot of time on this, but this one is setting up for a big move. That's why I spend so much time on it. I like this beast, one of my favorite currency pairs to trade. It is a beast. It's not for the faint of heart. You cannot use tight stop losses because it'll come down, hit your stop loss, and then move 3,000 pips in the direction you thought it was going, and you go, what happened? So that's why you get to these positions of authority, you let it run, and if you get pipped out, the technical picture's still screaming, the software's still saying, yep, then you get back in. So a lot of times you don't just pick the bottom and you're good to go forever. Sometimes I get in, I get pipped out, I get in, I get pipped out, and I'm making profit along the way, but then eventually it starts to run like it's supposed to. All righty then. What about the markets? What about the markets here? Well, I want to show you something, Mr. Tucson. We've been talking about this, that we're going to get a blow off top, and this isn't it. So what type of blow off top can we look for? Well, I found this interesting graph. Now, pay attention to this. This is really good stuff. This dotted line, which is this maroonish reddish color, not the blue, but the reddish color, is the current time from January 2023 to present. That's this dotted line. I know it's kind of blurry a little bit. I couldn't get a higher resolution copy of it. I was lucky to get that, but that's fine. And what is this old blue line was the dot-com bubble burst from 1996 through 2001. So basically like a 6-year, 5+ year move, how the markets traded going into the dot-com bubble burst, and then the aftermath after it started to, Elizabeth, I'm coming to join you, honey, here comes the big one. And NASDAQ even had a bigger, more obvious blow-off top. So, notice, coming into where we currently are, you see this, a lot of chopping and overlapping. Rallies, pullbacks, rallies, pullbacks. Then we get a blow-off top, and then we start to tank going into 2000. And this doesn't show the ultimate bottom reversal. It's just showing how dramatically this thing reversed into the dot-com bubble burst. And this is overlapping the current price action. Notice how it more or less mimics that. So is this the other bubble, like father, like son, that we're going into to get the big blow off top? And then we see, Elizabeth, I'm coming to join you. So is this going to be 26? Maybe. Is it going to push to 27? It might push a little longer, but that's the blow off top I'm looking for. A little bit more overlapping, grind higher on SPX, where NASDAQ had a big push. Maybe that's the AI bubble that burst, thinking when they realize all these AI, there's only maybe a couple of them, and then we get that. But notice we're here, somewhere around the 98 area where we currently are. Here's 97, 99, pushing towards. So maybe we got another year at this blow off top pushes, maybe, and then we explode down. So this is inevitably written on the wall. But again, you see the blue, what happened back in 96 to 2001, we got that big push higher, blow off top. Then the dot-com bubble did burst. And the red line is what we're currently in, and we're kind of mimicking it. It's not perfect, of course not, but look at it, the way it kind of stair step, got a deeper retracement, and now we're just kind of grinding, and we get that blow off top. Could this thing expedite? And we're talking November, December, January, like first quarter or something? Maybe. Or this thing could grind into 27 before we start topping out. We shall see. But this is very interesting how both the SPX 500, S&P 500, and the NASDAQ are kind of mimicking what happened back in the dot-com bubble burst. So do they continue to play out? Patterns typically repeat. So I'm not trying to tell you this is absolutely going to be the way this plays out, but I am looking for a blow off top, and we're not there yet. Got it? So this is what this is telling me. And the more we push toward, it scales here 2000 because that's from this price action, but we're overlapping it with the current movements starting in 23. And that looks very similar, doesn't it? So Harold, this right here is very interesting, is this kind of fits my short-term outcome for ES. This chopping first, blow off top, then down goes Fraser. NASDAQ, maybe a little chop, but we're looking for a pretty obvious blow off top, and then down goes Fraser, right? Here comes the big one. Elizabeth, I'm coming to join you, honey. All right, so let's go to the charts and relate that. Well, from the recent high to low, the pullback, and including this little dip the other day, we held that 618786 zone, and we bounced back up, and we're breaking from the recent high to low, 618786. So, Mr. Tucson, this is likely, looks like a 1, 2. We're going up in the 3. We're going to get a 4 correction coming back overlapping, because that's kind of what that other picture showed. So maybe we come back toward, probably won't make a new low here, but we'll probably push majority of that, maybe 6,600. Then we get a blow off top somewhere around maybe that 69. We shall see. But that's what I'm looking for in the short term. And this doesn't include the blow off top yet. We haven't had it. And even after that price action plays out, is this definitely going to be the blow off top? No, we could do another correction and go into the 7s, and this could push into 26, and we go up here, something like that. But in the short term, this is what I'm looking for, Harold. We're going to rally toward that 68.50, 68.88, then get a correction back down, maybe towards 67, 6600, kind of overlapping. That's what I'm looking for. And then another push that'll probably push us up toward that 69, maybe 7,000 range. All right. So what are we saying? I'm liking the long, right? I'm liking this to grunt and grind, laboring, huff and puff, grind, grunt type of move. But then I'm looking for another push lower, then another push higher. So if you kind of do the measurements on that, this initial move from that correction, 1, I'll just do numbers, 2, 3, 4, 5. Now, what's that time frame? I don't necessarily think it has to get here today and then tomorrow and then Friday, nothing that soon. This thing could kind of chop and grind for a while, meaning we grind up, then we start getting a pullback because it's still that overlapping look. Remember when we went to the 15-minute last week and I warned you that we were going to get another pullback and then look to buy the bounce? So we kind of had this scenario. We had a little three wave, got a pullback, three wave, a pullback, three wave, a pullback, three wave, and it got ugly. So that's what I was warning you last week, that we were due for that pullback. Because going into it, we had like a three wave, a pullback, a three wave, a pullback, a three wave, which stated this thing has been grinding higher, but it's not doing it where you would normally think this is, blow off top. We're ready for this price movement for this thing to go much higher. Well, you did get another correction. And I still think we're going to get up to these targets up there, but then we're going to get another correction. All right, so that was drilling down on those lower time frame. And did that play out like almost identically? We even put the support zone, same type of move, and we did make new lows. Remember, we talked about this as we were grinding higher. We're due to break some lows, and I was questioning probably this one, but maybe not that one. And we ended up taking that one out, this one out, and not quite this one. So that's part of the bigger 1, 2. We're going up in 3 after all this corrective slop. It's ugly, but that's why I'm giving it the overlap, because this is clearly overlapping. And this is part of that 1, 2 going up in 3. And then we're going to get a 4, then a 5, right? So I'm expecting it to be more overlapping. That makes sense to everybody? So from the bigger picture, what are we looking for? We're looking for this to rally, and it could be days, could be, week, whatever. But this just is kind of grunt and grind its way up here, get another correction back down, probably into the 67, 66-ish range. A nice steep retracement off of that low. Then we get the last push, which will push us again to some new all-time highs, probably push us toward that 69, and then we'll reevaluate. Could this be the end of the blow off top? And Elizabeth, I'm coming to join you at that point? Sure, it's possible. But in the short term, I'm bullish. After the correction, I'm bullish to reach the target. Right? Recent high to low. We broke the 618. We broke the 786. We closed above that. So how was that tell us? 75% chance we go into 68.54, 70 plus we go into 68.88. I'm really not looking for this thing just to blow off straight up here. I'm looking for it to come into the zone, then get a pullback, and then get a push higher. Okay? And this could last days or weeks. That could last multiple weeks, and this could last even weeks to months. So I'm really not looking for this in a matter of days, but anything's possible. I just know we're going up here, then we're going to get a correction, and then when the correction is over, we buy the dip and look for it to go higher. So use your ping pongs between the levels, and that's what we're expecting. Everybody good? So if you want to label this on the daily, that's the 1, that's the 2, going up in 3, somewhere in that zone. We come back down into the area of wave 1, so it is overlapping. All this coming into that was the same thing, overlapping, overlapping, overlapping as we drilled down on that 15-minute. So that tells me high probability when we pop up here to make all-time high, we're going to come back into the area in which that initial move up is for the 4, and then we're going to push towards 5. So that's the turn-by-turn GPS coordinates. So be sure when you start to get up into this zone, you're in a position of authority, because I'm looking for another push lower, probably somewhere around 67, 66. If we break this low, then we got a much bigger correction coming. But I don't think we're going to see that. I think we're going to go up, we're going to come make another higher low, then another higher high. Got it? All righty. And what about NASDAQ? Pretty much ditto. It's looking the same, feeling the same, overlapping corrective action from the recent, and I didn't mean to condense it that much, but the recent high to low, we're looking at a similar type of move. So we broke the 618,786, yesterday's close. Says where are we going? 75%. We're going to 25,636, 25,6, and 70 plus, maybe around that 25,7, 25,8. So kind of a similar type of overlapping chopping action. 1, 2, 3, 4. Whoop, terrible looking 4. Up to 5. So use your ping pong between the 1448, 1272, and 1618. What does that come from? Recent high to low. Got a 618 retracement in this. It held twice. Now we broke above from the high to the low. We broke out. So all practical purposes, and I mean, this thing is going to chop and grind. I'm still looking for another correction, but I believe we're going to drift up here. This doesn't mean, Randy and others, it doesn't mean, well, that means we're going to get green candles every day until we get to 25.6, 25.8. Then we're going to see nothing but red candles as we come back down into below that 25.2, maybe toward 24-ish, 24.7, something like that, 24.8, between that to 24.4. So somewhere in this zone, overlapping to then push up to go toward 26. That's kind of the plan. But this does not have to be green candles as it gets up there. I do think it's going to grunt and grind, stair-stepping its way higher. So what do we need to do to confirm it's going to continue to go toward the targets? Use another one. If there's not enough lines on here for you, run another one, Emir, from the recent low up to the high, and we'll see where that 618786 zone is. And then you start watching that as a support zone, and you can see it is right around that recent low to high. That 618 is roughly around that 24.8 area. So let me move this out of the way. And let me get that note, 24.6, 24.7 and change. So we can move this down to 24.6, 24.7 and change, roughly like that. And what is this? From the recent low up to the current high, we get any type of retracement down here, we have to hold the support zone. So I'm going to go in and change this to green. Right? So Emil, what's this telling me? We're going there. As long as any dip holds that, we're definitely going there. Got it? But that's why I was trying to tell you, this move does not have to be green candle, green candle, green candle. Amen? And could it be that we take time to drift into the end of the month, into FOMC? Maybe we just kind of chop and grind and FOMC causes this? Or do we kind of get up there, we come down here, and then FOMC forces us to bounce? We shall see how that plays out. Even though the government is shut down, FOMC meeting with the rate cut should still hold. And speaking of rate cuts, look at our DGS2. Remember, they cut the rate, came down to our green line. Now, can they cut again? We're starting to break lower. Remember what I told you? As long as the Fed sees this, we're nowhere near the current rate. So the likelihood they're going to cut a quarter point looks good. I mean, anything can change by next week, end of the month, that is. But we're looking for likely this will drift lower because even on this, the low to the high, we broke the 618 to 786. So what's the likelihood this is going to drift down here to 3.3, 3.25? Looks good. And what has it been doing? That exactly. See it? Isn't that pretty cool? So do I normally use my Fibonacci retrace? I put it on everything. I put it on my daily calendar. What am I going to do today? I put my Fibonacci's on there. I digress, but this looks good even after the quarter point cut. We're up here with quarter point cut coming down. So the likelihood we could do another one and still not be at risk of being overtaken looks good. Amen? So those of you that are not familiar with this, the 2-point maturity rate, a 2-year maturity rate, is what the Fed follows. So we can take this out and look at the big picture. And this goes back many years. But even during the dot-com bubble burst, we were just amplifying how the markets are mimicking this type of move. Then we got Elizabeth, I'm coming to join you, honey. The Fed chase rates. When the blue line goes up, the Fed's got to chase rates. Actually, I should change that back to my burgundy line. I don't know how I changed to blue. So let's go yellow, orange. That'll do. Yeah, that looks good. So match my Magic Fibo. So when the blue line, which is the 2-year maturity rate, races up, the Fed has to raise rates. When the blue line goes tanking down, the Fed has to cut rates. They don't just randomly lick their finger, stick it in the air and go, well, we're going to cut rates or we're going to raise rates. What are we doing? They follow this. And notice, even years past, as this stair-stepped, the Fed had to raise rates and they did like a point, quarter point, quarter point, quarter point, quarter point, quarter point. But look at this one over here the last time. It went vertical. Look at the blue line. It didn't really stair-step. It just went up. So our Fed had to raise rates the fastest it's ever done in history. 0.75, 0.75, 0.75. I mean, they've never done that. That's because this thing went vertical and they had to catch up. Now we're starting to break back down. We kind of topped out, started to break back down, and they started to cut rates, cut rates. And on the one cut here, which I thought was political, it actually broke above for a minute. Mr. Powell was going, humming, 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 humming. What am I going to do if this thing goes higher? I'm going to look like such an idiot for cutting rates. Well, now that we're coming drilling down, I think we're still going to go lower, which would allow us to do another cut rate. And it looks good for this next cycle. And remember that FOMC is October 28th and 29th. See it? So what are they going to do? I think they're going to cut rates. And that's based on our DGS2 and zooming in on the daily. So you can see what all that looks like. It appears they're good to go. They cut rates, went down, as we said they were likely to. And that's why I said I don't think they're going to do 50 basis points off of here because that would put us too close to where price was back at the last cut. So could we go another quarter point? Yeah, this is likely going to just chop and grind lower. And then we come down somewhere in that 3.8 range as they do another quarter point. Looks good. So in my humble opinion, anything can change between now and next 8 days, 9 days. But I do think they're going to do the 25 cut. And does that stimulate the market or does that make the market sell off? Let's just find out where the market is located as we move into that. But that's why I wanted to give you these turn-by-turn GPS coordinates of where I think the market is likely going to go and how it's going to get there. In the interim, that's the problem. Anytime I play with this thing, oh, it's because I changed the shame. I did not want to do that. So I'm going to, excuse me 1 second while I correct that. DGS2, back with the Fed rates. Let me get that to back. I didn't mean to do it on that chart, so I'm going to leave that like it is and come back to ES over here. And this is what we're thinking, Emil. Let's see how this plays out into next week-ish. Do we get up here? And then the Fed does something and says something it doesn't like. We get the correction. Or are we already going up here, coming back down? And then the Fed cuts rates and says something good, and that gives us the pop. We shall see where we are. But the bias is this. We're going to go up into that, correction, then another pop. Overlapping. The key is when we get up here, we should come back to overlap. So that would put us around 67, 66-ish, 100, somewhere in there. And then we go popping. All right? So what are we looking for? Just like I said, when we get the drop, you want to buy the dip. Then we get another drop. Then we want to buy the dip. Amen? In the interim, this should grind higher. Again, what's the key going to be? Well, from the recent low to high, watch the 618786 zone to the downside. So from this low to the current high, we need to watch that 618786, which puts us roughly 66 to 60, low 66. So that's what I'm looking for. If we get any kind of pullback before we get to these targets, buy the dip, as we should grind higher up here, then get the overlapping, which should still put us in that 67, 66, maybe upper 65 before the next push. Got it? All righty. NASDAQ we just reviewed, but it's similar. I'm watching as long as we hold this support zone. We're going up here, which is still several hundred more points, like 300 plus, maybe 400-ish points. So any dip should be bought in the short term, especially if we see a nice little pullback into this zone. I'd look to buy that dip. I'm not trying to tell you NASDAQ has to do that. No, it can just turn into a green candle and just keep going. But the bias is based on the recent high to low. We took out the 618786 on that candle right there, saying we got a 75% chance we go to 25.6. 70 plus, we go to 25.7-ish, 25.8. That's the plan. Then we get a bigger correction. Then we get another blow off top. And at that point, is that tying up with the end of the year? And that's the end? Or do we go into 2026 and this punch junk euphoria continues and we get more something like that? Blow off top, just an obvious blow off top. So we'll watch this. We'll keep this on our radar because it is kind of following some grunt grind, big blow off top, and then look out. This one grinds a little bit more, but we had the bigger run earlier when this one was kind of consolidating and pulling back. And then we got a lot of overlapping here where we pop, then we overlap to finish where this one kind of pops. So again, not to tell you that absolutely NASDAQ with AI is going to mimic this to the T. We're going to get just this huge run, then it's over where SPX is going to overlap, but both of them are looking for some overlapping in here before the blow off top. Overlapping before the blow off top. Got it? So that's why I'm kind of projecting everything but predicting. We leave that to the prophet, that we're going to go higher, then another correction, then more. But that's why we're looking for that overlapping price action. And again, Harold, we talked about this last week, looking at the 15-minute, and what was wrong with that picture? Same type of thing. We got a correction, three-wave move, correction, three-wave move, big correction, and now we're grinding. So this is still overlapping. So that's why even as we go up to these targets, we're going to get some more overlapping because that bigger picture is made from overlapping price action. So I do think this is the one, the two. We're grinding up in the three, come down in the four, and then go up in the five. But a lot of overlapping is still to come. So be careful. We could retrace first before getting up here. Even if that is the case, and we get up here, I'm still looking for another correction before another blow off top. So a lot of this grinding, grunting, overlapping type of moves to get up there. And then perhaps we go into end of the year, maybe some of 26. Maybe it pushes and delays this thing into 27, where we get that massive push before the big, Elizabeth, I'm coming to join you. So my timing may not be the end of the year and that's it. Could drag on a little longer based on that picture. We might drag on into 27. See where we are. That would put us somewhere around 98-ish. So another couple of years and then we start the big one. Maybe. Or is it 26? Get into 27 and in 27 starts the big one? We shall see, but that's kind of the plan. Still looking for the blow off top, then a big, big one coming. And remember what that looks like when you go out to these higher time frames. It is gnarly. When that happens, we get some massive corrections going way back into the dot-com bubble burst, etc., which is way back here at the beginning. Doesn't look like much, but it was substantial as we went into dot-com bubble burst and the 2007 financial crisis, etc. Amen? All righty. So any questions on the markets, where we think they're going, how we think the road to the move is going to look like, overlapping, grinding, grunting, laboring up, down, up, blow off top eventually, maybe going into next year, maybe it's pushing through 26 toward 27. We'll see how that plays out. But in the short term, grind higher, pull back, grind higher. Got it? So any dips short term until we get to these targets should be bought. And I don't mean, well, it pulled back 2 points or 40 points, then I should buy immediately. I'm waiting for the cycle, but the cycle is setting up. Go over here to the software, come back this direction, and we were looking for that little bit of a correction. We got the correction coming off the daily. My daily hooked and crossed, steep slope angle separation. My 4-hour went to oversold on that beautiful move lower. And what happened? We got the pop. And now what? Buy the dip, because we're going to go a little higher. And then we're going to get another pullback, which looks like the daily getting back to overbought. So this could grind toward that target, then turn over for that correction, and then another push higher as we move into the next couple of weeks, FOMC, etc. Any questions on that? There you have it. What about IWM? It too is grinding. We said it would reach these targets. It did. We got a pullback. So this overlapping, I still think we're going higher before this one's done. The bigger picture, we have these targets up here, 256, 265 area. So I do think we're going to grind kind of similarly as we've been talking about. We're getting a push, probably go up a little higher, get another pullback, eventually start pushing into these zones. But that's the plan. This isn't the blow off top yet. I still think we got a little ways to go. What about our global liquidity? Still think it's going into the 50s. And I'll stretch that out, zoom this in for you. I still think we're going up. We kind of reached the targets initially off of the recent high to low. Now we may get a little bit of a pullback for a continuation, but that bigger picture sets up for this 52 to 54 range up here. So I do think we're going to get this to go higher as we get the blow off top. This thing, global liquidity, will give us the same. And this is looking for the next push toward that 52, 54 range. Amen? Kind of that 52 to 54 range is kind of the sweet spot. We're looking for this to continue to grind. We talked about getting to 50. We've done that. Now we're pulling back a little bit. So next push should put us somewhere in that 52, 54 area. What else? As the markets rip and come back down, our UVXY got a little pop and then we're dropped. So I'm looking for, now that we're back into the tens, based on that wave 3 going up, 4 correction coming back down, I think we're going to get another pop in this in the coming days, weeks. And I'm looking to do another short-term call option on that, not like weekly, but give it a little time. But I'm looking for another quick little pop, take your profits, come back down, quick little pop, take your profits. So this is another one we looked at the other day. We took some nice little profits. Depending on when you got in, it was a good 60% gain in a matter of a couple of days. It was not too bad. Now we're coming back down on the pops. So I do think as we get the correction, so let's kind of put that pencil to paper here, as this rallies a little bit more, that UVXY will probably pull back some more. And then when we get the next correction of several hundred points, meaning we're up in the 68s, and we pull back down towards 66, that should give that UVXY a nice little pop. Like when we were here at 68, went down to 65, that gave us a nice little pop. Got it? So that's kind of the plan. No buy, sell the whole recommendation. That's just kind of what we're thinking. And that's how I like to trade this. This is the ultra short, so it cuts both ways. But when the markets tank, VIX spikes, this spikes times 2, and you get dramatic reaction. And my little dollar call option went up to like $1.60. I like it. Made a little bit more. I got out a little bit early on that Friday surge because it was so significant. And then we got a little bit of a pullback. If you got back in on that pop, good for you. I just took it when I saw it, 60% gain in a matter of a couple of days. I can live with that. And Emil, I do think as this grinds higher, this will grind lower, come back down to its resting rate in that 10 range. And as we get into the 10 range, which we're testing, we will look for an opportunity for another pop as the markets drop from that extension up there down in overlapping. We showed you maybe that's 6,600, 67, 6,600 from the upper 68s. Then this could be the next little pop we get on that drop. So if you under what this does, when the markets go down, this thing goes up. VIX spikes when the markets go down. And this is an ultra VIX. I don't buy this. This is a declining asset. This is not something I buy and hold. I just trade it on pops. Pops. And this didn't look like much, but on options, that was a 60% pop and then some. On that little nothing, looked like a little hiccup, but it did what we needed it to do. All righty, so keep an eye on this as we start getting near those extensions up there on ES, NASDAQ, etc. We start getting toward those extensions. Then I'll look for maybe buy one of those call options Go out to maybe December. I'll look at what the pricing is, give it time, but I am looking for another drop coming in here before the end of the year, before the next run before the end of the year. So that stair-stepping move we talked about, you could play that via UVXY. Alrighty, let's continue. What about Black Gold Texas T, the Beverly Hillbillies? Have we been spot on with this dude right here? We're breaking down, ladies and gentlemen. Yes, we'll probably get a little bit of a bounce, which is fine, but the bias is written on the wall. We took out the 618, took out the 786. I've been calling for this to go to 60. Finally broke below 60. 52, 50 area is where we're headed. So Dan, anyone trading Black Gold Texas T, any rally should be sold, as we've been talking about it ever since rockets flew and we got this correction. We took out the 618. We said any rally should be sold, any rally should be sold, any rally should be sold, any rally should be sold. And we're headed where? 52, 50. Maybe dip into the 40s. So again, any rally should be sold, because we are definitely coming down into the 50s. I know we're in the 50s, but down into low 50s to 50 or lower. That is the plan. So when we talked about that, we said there are ways to play that. UCO is one way to play it. We're looking for as SCO, SCO. As oil prices are declining, SCO is going to climb higher. So which way? You can buy options on this. I check the liquidity and make sure they're good, but certainly can buy shares. And we're not looking for like, oh, it's going to go from 19 to 1900 or anything insane, but we're looking for a retest of the 22, 23 area. That's the start. And as we start spiking toward that 50 and lower, this thing should start spiking up toward that 25 to 27 range. When are we going to get interested in that? When we start getting above 20. Recent high to low, 2068 is my 618. We start closing above $21, for example, then the likelihood we're going to go testing 25 becomes very high. And what would that look like? Well, you can see the last time oil prices dipped down to 55, we were up here. And we're not there yet, but we're still got a good $7 decline. And this thing should pop somewhere into the range of $5 pop to $7 pop. That's kind of what we're thinking. Amen. So when we talked about it, we've been grinding higher, just like we said, as oil prices grinding lower, this baby's grinding higher. So spot on, my friends. This is likely going to continue to play out. And I do think oil prices will go down. So any big dip on this in the short term, because oil prices pop, this will dip. And then when it dips, buy the dip, because I do think oil is going to do the inverse. Any rally should be sold because we're going lower. Amen. And as this continues to go lower, SCO is going to continue to grind higher. All righty. What about gold? Be careful with gold. This might be the bigger correction. This thing could turn into several $100s very quickly. As we can see, we're in 43. We're already in 41. That's gnarly, right? I warned you about that it was due after this parabolic move. So I would not be surprised to see this come back somewhere around that 3,700, maybe even 3,500, where we kind of broke out from. That support zone we put in here a while back. Been looking for that. Magic Fibo is in the area. It's still sloping upwards after that massive run, but this is due for some sort of retracement. And it looks like we're in the midst of it with that big red candle. So don't think that it couldn't drop down here several hundred more dollars very quickly. It can. I warned you, the more parabolic this becomes, the more volatile and quick that drop could be. And look at that one candle. It engulfed multiple days already. So be careful. I don't think this is just a quick dip and we're going to continue this punch drunk euphoria and we're just reversing. I'm looking for a three-wave correction, and this could be part of that A, B, C. But I really would love to see that vertical move come back and retest where we broke out of. And if it does, that's a good buying opportunity. Amen? All righty. Any questions on that? So how are we at least looking? You can take from the recent low to high, 618786 zone, which puts us a little bit higher than this box, a little bit. From that low to that high, that would put us right around this zone, 37. That's where that came from, 35. See it? So be careful. Likely coming lower. 37 to 35 range looks a great possibility. And if we don't hold that, then it's the magic Fibo and retest the breakout, which kind of coincides with one another. Then what? Good opportunity to buy the low and look for a continuation. Silver, ditto, same vertical move. Where could we go? I'd like to see it come back and retest that magic Fibo. That would be a thing of beauty. Start working its way down, then bounce. I still think silver is headed, right, Mr. Tucson? No ifs, no buts, no ands, no exceptions. It's going to 60, 70. That was a guaranteed price. Nobody guarantees anything, but that's pretty much the guarantee based on the breaking the high, 55, 60 area. And I went on to say 70 up to the 1618. That's a vertical move. We're just recently breaking out of all-time highs. And that's why I warned you, as we do that, we're likely going to get a correction before we can get up to these upper targets. I like SLV, which again, SLV barely made a new high, temporarily made a new high. Look at that. Just barely, but it did make all-time highs. So I definitely think we're going to 60, 70. That's my given. But I warned you about a correction in the interim. So knowing, right, Emil? Knowing we're definitely, in my humble opinion, going to 60 slash $70, and that's conservative, that any dip should be bought, because the more we dip, the further we got to go to get up here. That's pretty simple. The more we go down, the further we got to go up to get to that target. And that is very conservative. And how much lower do we go? Well, kind of drilling down back to the daily, looking at current price action. We got a, from the recent low to high, 618786 zone. I'd like to see it, like I was saying, here's my magic Fibo. It's right in the middle of that. I like to see this thing just kind of stair step its way down in here. Anywhere in that 37 to 35 range would be ideal. If it gets there, what do? Back the truck up, because you're looking at a double if it can get down here. Well, Garrett's at 44. No way it can get to 35. Easily could do that. So be careful. So far we got a low, and it's bouncing a little bit off that big sell-off of 43. So not too much further. But when do we start looking at, well, is this just the dip I should be buying? If you're buying this dip right now, as it was up here, and you're buying that little dip for the long term, knowing it's going to 60/$70, fine. But if you're a short-term scalper, trader, options kind of thing, I would be very careful about loading up here short-term options because we're probably going to get another leg down. So what do we need to do? You take the high, Harold, you take the low, and you watch this resistance zone. Sound like a scratch record. We do this every day when we're trading. High to low, look for a 618 retracement. If we start closing above this resistance zone, then yeah, we could go breaking out, go to 50, 51. That sounds good. But if this bounce fizzles at a lower high, then we're likely going to get a lower low. But where would those targets come to? Well, you can use the 3-point tool from the high to the low. And let's say we rally up near this lower high. That would put us somewhere around 40, 39, right? Just assuming that this is going to hold here and retrace a little bit back toward a 618 type of retracement to fail. And this would be what we call the A. Rally in here to a B, and we get a C in this zone. This is sloping upwards. So if this takes several days or a week or so, maybe we intersect somewhere around 38, something like that. But from this recent correction, that vertical move, you typically at least want to see a 618, 786 type of retracement out of that. And so far, we haven't done it. Let me make sure I got the right numbers. This would go up to the top. And my 618 would be around 40 bucks. So I'm going to move this guy up a little bit to match the current price, which again, my Magic Fibo is not too far from there. So from the recent low to high, we get a 618 retrace. That'd put us around 39. And that fits this high, low, lower high, lower low scenario right in that 39 range. All I can say is the more we dip, the more you should buy shares or whatever you want to do for this to go ripping up to 50, 60, 70. 70? Yes. 60? Yes. My humble opinion, guaranteed. Now, why is this still underperforming? Silver is way underperforming. Look at gold from a weekly perspective. I think I can get there with that. And you pull back gold here and you look back when this topped out. You go back in our archives. I warned you when it was at 1900 that we'd go back to 1,000 before we'd get to 3,000-ish. We did that and then some. Well, I've been looking for this pullback. Looks like now is finally the time it may be underway. And we get that bigger pullback before we go ripping into 5,000, 6,000, etc. So, but look at where we broke out. We're already up here to 3618, pushing a 423. Wow, that's quite impressive. Look at silver. Silver, we barely just started breaking new highs. So if we start pushing that 3618, 3.618, 4.23, for us to catch up with gold, look where silver needs to be, Mr. Toussaint. That's pretty impressive for us to start running up in that 140, 170 range. Now you know why my $60 to $70 target is so conservative. Wow. Well, there's no rule that says silver has to catch up Fibonacci extension wise with gold. No, but it typically does. Gold runs first, silver starts catching up, and then that's when the big run is over and you get the bigger correction. So silver hadn't caught up yet. That's why I think we're definitely going much higher. So any pullback on silver should be bought and shoot for 60, 70. Whether you're buying silver or silver futures, it's all the same. A little different way to do it, but the 60, $70 target's still the same. And what if we do it on silver futures for those futures traders? Same thing. 3618, 423 is that 140 to 170 range. If it were to catch up, that's substantially higher. We're talking $100 plus run to get up there. Wow, that's pretty impressive. Well, any dip, I'll go back to my arrow, any dip should be bought because this 60/70 is a done deal. And SLV, the way most people, a lot of people trade this, same thing, way underperforming. When we start pushing those limits up there, that thing could go to the stratosphere. 145, 168. Wow. Over $100 run on that one? Yeah, that's kind of the plan. But in the short term, dips should be bought, shoot for 60, then 70. And this is not something we just recently been talking about, armchair quarterbacking right now, that this was going to come in play now. Well, duh. I look at the market and this is where it's saying it's going. Well, remember what we've been in. We've been in this thing for years. Ever since this COVID shutdown low, I said back the truck up, and then we got a 618 retracement after that run. And what have we been talking about since 2021? We were going to 35, 41. I thought we'd get there by the end of, last year. And I said certainly by 25. Well, we did get to 35 last year. We just didn't quite get all the way up to 41 and higher. But there you have it. That is screaming. So this still looks like a pullback slash another push, which is off the chart. And you can see I still got the software running. And this thing has been running for a long time. And it's still ripping higher. And this pullback will be met by adding to the position and shooting for, you can see my targets up here at 62 basically, but I think it's still going to go higher than that. And I kind of warned you about a pullback. Monthly was getting overbought. Weekly was getting overbought. We need to get a little action going down. And then what happens when you get a weekly hook and a cross with slope angle separation, Dan, others? We typically, highest probability, going to get a daily cycle down. And this is another reason why I missed the Tucson. My daily cycle down is not finished. So I'm looking for this to stair step lower. Maybe we engage, disengage to finish the cycle. But when am I looking to buy and add to this position? When the daily gets oversold and the PAI hooks, I'm looking to add to my position. That's why the software is invaluable, along with my God-given talent, technical analysis of reading and interpreting price on a chart. But this is what we're looking for. A pullback which is underway. It'll probably last a few days, obviously. And I don't think this is just the end and it's going to go up like you saw this big rejection wick here. Even started to grind a little higher and then, uh-oh, look at that. That's gap downs, etc. This is what it does when the markets are closed and they reopen. That's why I look at silver futures, etc., because there's no gap downs and gap ups per se. You typically get a lot more price action in here to watch it. And I don't think, hint, 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 this is the end of this pushback and we're ready to go blasting off. Anything can happen. But the software has been my guide for, the difference between our service and others. We don't do shiny object syndrome, right, Mr. Tucson? 15 plus years ago, when we first started talking about this, I said, this will be the last system in trading service you need, because we'll be able to guide you through any market condition. In the software, we're not going to be selling a shiny object this week and then next week and another one and another one and another one. This is it. This is all you need. And here you go. So I don't think this is the end and we're ready to go blasting off. Will we go higher? Absolutely. We're going to 60. We're going to 70. But is this little correction over? I don't think so. My monthly is turning. My weekly already has a hook and a cross. So I'm looking to buy the dip when the daily finishes the cycle. Then we can add. But if you're adding right now, knowing it's going to 60, knowing it's going to 70, then by all means, do it. But I would not be trading options on that. Or futures right now, I think it's going to go lower before we then go higher. So I don't think that's the end of the dip. I better hurry up and buy it. Now we're ready to go blasting off to new highs. I think this will correct further, and that kind of fits the mold with my, and I'm on the wrong one, this one, silver, weekly hook, weekly cross, steep slope angle separation. My 4 hours just now starting to get oversold. So short-term little bounce, yeah, that would make sense. The daily hooked and crossed, the 4-hour cycle, like clockwork. My weekly's hooked and crossed, my daily's not finished cycling. So what am I anticipating the 4 hours going to do in the software? We're going to get a little turn up here to slingshot lower again. Just like we did there. We turned up, slingshot, turn up, slingshot, turn up, slingshot. And this will just keep grinding lower, maybe go up a little bit to turn over, but kind of a slingshot scenario as that grinds. And when the daily, which is really just getting started, so this is why I don't think that's finished, Mr. Tucson. I think this will grind lower, and yes, the daily could go up, slingshot, engage, disengage, engage, disengage. The longer it does that, and the more it does that, the longer that cycle can take. But I'm salivating right now, Emil, to buy the dip when this daily gets oversold and the PAI hooks back up. So if I wasn't in this trade, I could go into my trade management system and tell it automatically, let's buy the daily, trigger long when it comes down further. And what do we know about a daily cycling? On the weekly hooks and crosses, you get steep slope angle separation. The daily is likely to cycle. And when you look at Ichimoku cloud, price is likely to get sucked and pulled into the cloud. How about that? So should I see my daily oversold, trend momentum oversold, my PAI hooks, price is somewhere around this cloud area. If it grinds sideways, somewhere into the cloud area, looking for a bounce, that looks ideal. Amen? Again, weekly, PAI hook, trend momentum cross. We got angled separation right there, green below the red, and we got a decent slope. So that, my friends, look at, we got a big trigger. How about that? What does that mean? Position trigger. That means the daily, the weekly, and even the monthly are in agreement. That's why you get that big trigger. Huh. It's all in there. It's like Prego. So the weekly's got a big trigger because my monthly's in agreement. See the monthly? It's overbought and it's starting to turn. My weekly has the big trigger because the monthly's in agreement, the weekly's in agreement, and the lower time frame daily's in agreement. That's why you get the smaller trigger on the daily, the bigger trigger on the weekly, because all are in alignment. Beautiful. So in closing, weekly hook and across, the probability the daily grinds and grunts its way toward oversold is a high probability. the probability of this correction grinds and grunts and starts to get sucked and pulled into the Ichimoku cloud is a high probability. When do we buy? When the daily gets oversold and the PAI hooks. That's when we buy the dip. Amen? All righty. I think you got it. Same thing with Mr. Gold. That's silver. Here's Goldie. Same type of thing. We have a monthly overbought. Hadn't quite hooked yet, but it's flat. Weekly is turning over. Don't quite have the exact thing silver has with the hook and the cross, but my daily's definitely got it. Hook, cross, slope, angle separation, trigger lower, beautiful. My 4 hour is going to do what? Cycle down. What's it doing? Cycling down. So I'm still looking for this to come down. Notice when the 4 hour cycled, it was above Ichimoku cloud. What did price do? It goes into the cloud. Can't make this stuff up, can you? Look at that. So what can happen with gold? I would look for as the 4 hour turns and starts going up and we get a little cycle back up. And I don't think we're going to cycle. I think we're going to go up the slingshot lower and we'll get this part of the initial A. We get a little B wave correction as this slopes up to slingshot lower. And then we get even a push lower. So I'm thinking we're probably going to get an equal measurement where the daily gets oversold on silver and gold. Come back to my arrows. This is what we call painting the PAI MPA PE5 version 5.0 software Picasso. So likely would love to see the daily get oversold. PAI hooks up, we buy it. This gets sucked and pulled into the cloud, and then we look to buy it. Okay? That's kind of the plan. But as you drill down on gold and silver, etc., whether you're looking at futures, etc., where's a likely spot for us to go? Same kind of thing. Use the recent swing point low up to the high, 37, 35. We did this on gold. Now I'm showing it on futures. Likely this is going to stair step its way down toward maybe 37, 35. And my Magic Fibo is sloping upwards. This could take a few days or even a couple of weeks or so. And we grind into here. Maybe we get sucked and pulled and we touch the Magic Fibo along with the correction to buy the dip. That's the plan. But I don't think this is the end of a correction. It's ready to go breaking out. So Mr. Tucson, what do you need to do? Verify it. Use the 2.2. You go from the high to the low currently. And we watch this 42.90 up to 43.40 area, 618, 786. So we have a resistance zone up here. Here's my resistance zone. And bring it in that zone. So that 4 hour starts to reverse. My daily continues to push. The 4 hour will go up, then slingshot lower. We should make a lower high, lower low as the daily continues to cycle. Got it? So all we're looking for is a pullback a little bit deeper to buy and go. Now, if you're just buying gold just as an investment for long term, no problem buying at 4,100. I do think it's going to go lower first. Then we can add to your position or just keep buying. But in the short term, I would not be gung-ho on, let me buy this little dip because it's going to go ripping to 5,000. I want to buy it now because by tomorrow it'll be at 5,000. This thing looks impulsive to the downside so far, and that would have to lead us with after that vertical move up, right there, big vertical move up, we likely need an A, B, C type of move. And typically we like to see a 618, 786 type of retracement out of that. Everybody with me? Okay. So short term, if you're a day trader kind of thing, any rally on gold should be sold short term. What? That goes against everybody's just buy gold. Yeah, but we need a correction first. Long term, absolutely buy it. Short term, I think we're going to go lower to then buy to go much higher. What about crypto? What a big reversal in Mr. Bitcoin. Hmm. Look where we went to, Ian. Amazing. Truly. What did we talk about? That rally shy went up to 618, right, Harold? What happened? It failed. So we went to the extension from the recent high to low. We broke the 618,786. So even as we dipped in here, went to those targets, then the most recent move went right to it. You mean, look at that, bounced off of that. How do you know where price is going to go? God-given talent and Mr. Fibonacci. Amazing. So now, when do we get real bullish? Is this the run? Or are we going to fizzle at another lower high and get another lower low? It is possible, but I like the fact that it came below and held the Magic Fibo. And even this, we tested it. Now, if this holds and we're breaking out, then we do what? Take this off since we had all that move. And I'm still looking for the blow off top for the markets and the blow off top for crypto. So what did we do from recent high to low? We reached our extensions, right, everybody? Now we're reversing. So in the short term, our recent high to low, if we close above that 618,786 today, then my target is going to be 117.6, 119.2. Yep, 1448. So this move right here, Emil, that high to that low, we're closing, we're above it now, but we got to close. There's my 618. Here's my 786 we're testing. So if this green candle can hold on, close there, then we're likely going to 117.6, 192. That's just on the smaller move. What about the bigger move? Well, that's this high to this new low. And you can see based on that one, my 618 is up here with that swing point. See it? 618 off of that high, that low. We get that 618. No, it's right here. Sorry, 618. So we start breaking above this swing point, which puts us into this target, right? We close here, we're going to go there. And Mr. Tucson, from that high to that low, we get up to that. That's breaking the 618, which then sets the tone. We're going where? 130, 132. Any questions? So this is important today. We don't want to see a nice little wick and get rejected and we come back down. We'd love to see this thing at least close above this 111, preferably the 113 where we are. Close above that, setting the tone for 117.6, 119.2. And when we get to these extensions, that's the bigger picture now, high to low. That would be above my 618 up here, which then starts to focus 129.4, 132.3. I do think we're going to go at least into the 130s before it's over. But what I did not like on a daily chart, that could be the beginning, we got an all-time high. Then we had this right here, a lower high, lower low. That's like your first potential warning that maybe crypto winter is coming a little bit sooner than expected. So this is why this run to get back up here is so important. And then to go on all-time highs, that's where we still think we're going. But you got to watch price action. And this big rejection, then a 618 retracement that failed. I didn't like that. We ultimately got a new low, kind of the range we told you about, that if that fails and we close below that section, we'd go to 103. We did that. Now we're bouncing. So in closing, we close above this 113 today, then we can start targeting 117, 119 up there. That would be good. Why? Because we get above that 117 on the bigger picture right there, my 618, 117. Then it sets the tone. 75%, we're going to 129. 70 plus, we're going to 132. Everybody feeling me? Very important price action right now. If not, and we get yet another 618 rejection, then we would do the same thing we did over here to give you extensions to the downside. You would run a new one from the low to the high, whatever that might be. We don't hold the 618786, then we can start targeting 102, 101, maybe even dip into below 100. So I'm still very bullish. Our Mara call options spiked up yesterday, got a nice little pullback. I'd love to see this continue higher, but my call options we talked about are up tripled in the double to triple-ish range, and they don't expire till November. So if I see this breakout, I'm watching this closely, from this recent high to the recent low. We already tested it once on that spike yesterday. I want to see us close above today because we closed right at it. High to low. I want to see that hold. Then we can start targeting more upside. But I didn't like this big rejection. Even though it closed green, I'd like to see this thing break higher before we're done. So let me take a lot of this off because we have so many of these on the chart and give you a better view of what we're looking for. From that high to low, that's important. High to low. Let me take, there's one more on here I want to get rid of so we can focus more on that. See how we dipped up in here to that 618, but we didn't hold it. So I want to see this break above, then I can start targeting 23, 24. If this fails, high, low, lower, high, and we take out the low, I think I'm going to close those call options and look for my next opportunity. But I do think Mars is still going way higher, and I have plenty of time for that to go way higher. I just like to see it get past this little resistance box, which we're testing, opening the door for some new highs. Got it? BTBT, still own a bunch of BTBT stock, and I'm looking for this to go much higher. Yes, we started talking about buying well under $2 multiple times, so we're more than doubled. And every time we got these dips in here, I just added hundreds more, hundreds more. So I'm still looking for this blow off top. How much higher does it go? Well, I still go back to the last time when Bitcoin reached its extreme profitable zone during the last halving. This thing went parabolic. It just kind of chopped and grind before it went parabolic. We've been chopping and grinding even though we're more than doubled in price. That's fine. But we're looking for what? The big parabolic move. We hadn't gotten that yet. No parabolic move yet under this new halving. So that's what I'm waiting for. When it does, I'm going to unload everything I own. BTBT, Mara, Bitto, whatever else you might have in the mix when Bitcoin makes that final run. So go back. Bitcoin is at a critical juncture that we want to see it. I like the bounce today. I want to see it maintain and hold. We close above, then we can start targeting again the 117, 119. Short term, we get up to that target, then the bigger high to low, that would get us above that 117 by getting to that target. And by doing so, opens the door for the 130, 132 area. So that's where I want Bitcoin to get, is the 130s pushing toward 150, 170. If we're still going to get that, that's when that miners ought to go ballistic, because the profit margin becomes over the top. And that's where the parabolic moves come from. And I kind of adjusted looking at this. When we get to 130 and higher, that's when these guys ought to go parabolic, the miners. That's Mara, BTBT, etc. But every one of these on their own charts had a parabolic move from the last halving, which I got to go out to a weekly on this to show it to you. But the last halving, what happened? It went parabolic. And look at Mara. We got some pops in here, but this is not parabolic yet. So my big arrow up should be when Bitcoin starts to push 130, 40, 50, that scenario starts to get into 130s and higher, Harold. I'm looking for this thing to go parabolic. And when it starts going parabolic, what am I going to do? Sell, 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 sell. Right? How high could it go? This thing could just go parabolic into the hundreds. Anything's possible. But when Bitcoin starts to hit 130, pushing 140, 150 area, and this thing is parabolic, if it's already up here, I'm selling. I'm not, well, you could get more out of it. Maybe it'll go up to 150, 130. If it gets anywhere near 100, I'm selling. I'm just beside myself. We got in less than 8 and it's near 100? You tell me. So even if this thing, again, as I've been saying, is a huge bust, disappointment, the worst trade ever, it's going to 5x your money or more. I think it's going to get at least into the 50s. That's from the recent high to low. Parabolic move would be a 618786 type of retracement kind of thing from the high to the low. That would put us somewhere around that 150, say $50 range. I'll be thrilled, even though that would be a big disappointment. I'd be thrilled with my disappointment, right? At going from $8-ish to 50, that's huge. Amen. So again, in closing, I'm waiting for this thing to go parabolic. It will give us the parabolic move when Bitcoin starts pushing 130 and higher. That's when this thing, it could take off sooner, but that's when I'm looking for the big parabolic move to go up. And as it does, I need to start taking profits. Amen. And how much can it go? Up. Disappointment. I'm thrilled to get there, but if we go blasting and make a new high and we get anywhere near 90 and 100, I'm going to have to start selling hundreds and hundreds of shares, because it's just ridiculous that we were able to make that much money on some of these stocks. Amen? Any questions? Even if you just bought 100 shares and you went from $8 to $50, that's thousands of dollars just in that move, even if you only have 100 shares. I digress, but you get the point. And BTBT, I just went through, same type of thing. Could it go up to new highs? Yeah. It didn't go parabolic until Bitcoin reached the profit zone. And my calculation for the new profit zone is that 130 area. So if we push 130 to 150 or higher, this thing ought to go parabolic too. And even if it just does something as simple as a 618 retracement, Harold, from $2 and lower to $20, that's a 10x. Not too shabby. So I'm already sitting at a double, licking my chops. This thing could mushroom into massive amount. And even if it doesn't get to new highs, which it still could, we start getting above 20, then it gets interesting. We're looking at 37. So I want to see parabolic move. Where do we get to on the parabolic move? And when do I expect a parabolic move? Between now and when Bitcoin starts hitting 130, pushing 130 and higher, this thing ought to be full blown parabolic. That's the plan. I'll let you know when I'm going to be selling. Again, I can't tell you what to do. I'm not a certified financial planner, not my gig. I don't want to be one, but I can tell you what I'm doing. And the plan is for this thing to go ripping higher in the next several weeks. As Bitcoin hits 130 and pushes higher, this thing ought to go parabolic and substantially higher. Amen? All right, so with that, circle the wagons. Remember, the software, for those of you that like NinjaTrader, is available on NinjaTrader. We give you the Fibonacci extension relationship. So you go under drawing tools and you'll see our MPA Fibonacci retracement extension. It's the same one I use on all my charts. And this trading platform, which is TradingView, the same extension retracements are in NinjaTrader for your viewing pleasure and your calculations. And yes, I'm still big on Tesla. We got earnings coming on Wednesday at the close. Let me double check that for you. Tesla earnings is the 22nd, so that'll be tomorrow after the close. And I'm expecting good numbers because of the expiring coupon for the rebates. They had tremendous sales and other things that did very well. So this should push the stock prices we've been looking for, start pushing that higher rest of this week. So my TSLL, which is the 2x leverage Tesla, I have lots of shares of these, and I'm looking for this thing to go parabolic as Tesla goes parabolic. And just as a quick review, back in October last year, we talked about it October the 24th that this thing was going to make a big run as Tesla was expected to make a run toward 500. Consider the TSLL trade and go back in October of last year on the 24th that expect Tesla to hit 500. Whoops, right there. Expect Tesla to hit 500. Consider that TSLL trade. And what did it do for us? It went parabolic. And I'll show it over here on this one since I already have it open. But it went up and ran over here into 4170 high. From below 10 to 4170. Now we're in it again, waiting for this thing to go parabolic. How high do we go? If Tesla pushes 600 like we're looking for, we should be up in the 40s, like a double. If Tesla pushes, and there's a lot of options out there we talked about, some guys got like $25 million sitting out there in Tesla to go to 900, 910 or 940, what I think was 910. I don't know if that's an omen it's going to get to the 900th, but Mr. Tucson, let's just for a second fantasize that Tesla goes to 900. Where would this thing be? In the stratosphere. It's going to be pushing 60s and probably pushing up to these other extensions, which are maybe toward 90, 130. I mean, huh? I mean, if Tesla goes from where it is, more than doubles to get to that, that means this thing would 4x, because it's 2x leverage. That would put us in the 80s. So pushing 63 toward the 80s and 90s up here. I like it. Amen? All righty. So with that, we record these classes for your viewing pleasure. From last week, said the markets pull back, then bounce. We're in the midst of the bounce. Then we're going to get another one of these, look for a pullback, then a bounce. We kind of give you insight, what we're looking for things to do. But even oil prices, when we talked about going down to 60, oil expected to grind higher at that point. but we said it would go down in the 60s, expect it to continue to rally in there. And then I told you somewhere in here into the 60s. Now we expect it to step into the 50s. And we were looking for a few months ago for it to go down to 60. Yep, expect R to grind lower to 60. We did that. Now we're expecting it to go lower into the 50s, which spot on. So there you have it. It's there for you. And so in closing, good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.